There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Thursday afternoon. I'm Juliette Sarley. Great to have your company on a day when we have seen a nice bounce back on the market. Look at that, up by 1.1% as we round out the day's trade, tracking gains on Wall Street and rebounding from our worst one-day sell-off since April. We've got really tech stocks leading the gains. That was similar to what saw the rebound on Wall Street overnight. And the banks also looking pretty solid. So that takes us, of course, to the fact that today is very much a day of bouncing back. Now, we also had some data out in terms of trade, but also household spending, showing that it picked up in July. There was demand for health services, travel and accommodation. And of course, it comes on the back of the GDP print yesterday, which was really driven by consumption, so by consumers picking up the slack where government spending has fallen off. And that has led the RBA Governor Michelle Bullock last night in Perth to discuss the fact that there may be fewer cuts ahead, essentially, if we continue to keep opening our wallets. And low on energy, one sector which did not do well today was the energy sector. We saw quite a bit of weakness coming through in crude oil prices, down more than 2% ahead of that OPEC Plus meeting where they could be considering further production cuts. And you also saw the likes of ConocoPhillips fall by as much as 4% on Wall Street, that as it announced that it could be slashing to 20 to 25% of its workforce. Let's get to the sectors of the day though and kick it off with the miners. BHP trading ex-div today, so that weighed on the overall sector. Elsewhere though, it was a pretty solid session for those miners that were hit hard yesterday. Rio Tinto up by 2.7%, Fortescue up by around 2%. Looking at the gold stocks, they came off a little after yesterday's solid rally. We did see the price of gold ease back somewhat as well. We're continuing to look at the pricing of Fed Reserve rate cuts, but Goldman Sachs saying gold could rally to nearly $5,000 an ounce if the Fed's credibility is damaged and investors shift just a small portion of holding from treasuries into bullion. Quick look at the energy stocks as well. I mentioned mostly weaker there on the fact that you have seen crude oil pull back and the banks looking a lot better today. If we have a look at where they're tracking, I think CBA up, wow, more than 2% there at $167.89. In terms of some of the corporate stories we've been following, Austal gaining almost 5%. It says the US Coast Guard's move to exercise options worth $480 million is an important sign of intent on the ongoing Offshore Patrol Cutters program. We also saw KMD rise, so that's the owner of Kathmandu and Rip Curl. It's launching a transformation strategy aiming to cut costs by at least $25 million, which includes the closure of 21 stores. IAG shares a little weaker, the ACCC raising concerns over its strategic alliance with the Royal Automobile Club of WA, saying that it could lessen competition and increase premiums. Elsewhere, Iress had a great day, up by about 7%. The CEO succession plan has been nutted out. Andrew Russell will take the top job from November 17th. He succeeds Marcus Price and has about 25 years experience in that field. And Domino's shares rising. Remember, we caught up with Chairman Jack Cowan during reporting season. He already owned 27% of Domino's. Well, he's just snapped up another $5 million worth of shares. So very much putting his money where his mouth is with regards to how much he thinks Domino's is undervalued. All right, let's get to the COB, Mathan Somasundaram from Deep Data Analytics. Mathan, yesterday was pretty ugly, but nice day today.
Yeah, it's amazing how things can change in a global level in 24 hours. I mean, you couldn't work out any real catalyst change yesterday. Well, you can't work much out today either. I think the real interesting point where we are in the cycle is have the central banks lost control of the cost of borrowing and have the bond market taken over. I think more and more that is becoming true. So we're going to see this play out. Again, this hasn't happened in 50 years. So it's going to be a fascinating time. But yeah, volatility is here to stay.
Absolutely. But one space that has been holding up pretty well, and even though you saw gold come off a little bit today, has been the pile into safe havens. Do you sort of buy into that thought that Goldman's saying you could see $5,000 gold? And if so, would you be looking at picking up some of these gold miners?
Oh, look, I always worry when big brokers start making big calls. It's a seasonal thing. I used to be at Citi for a long time, a lot longer than I would like to remember. And when you're a big broker, every quarter, your macro commodity analyst is going to go through the numbers and they're going to upgrade commodities. Usually they'll be pessimistic and they'll play catch up to spot price. Gold is at all-time high, whether you're looking at it in US dollars and Aussie dollars. I mean, we've been long this thing for so many years. We still don't see the upside being limited because the main thematic is about inflation and bond yields and real bond yields. If real bond yields are falling, which means if inflation is rising faster than bond yields, well, then gold is going to go higher. I don't know what the level is. It could go 5,000, it could go 6,000. All I know is at the moment, there's a fair amount of debt. Governments don't have any plan B. We're trying to solve debt with more debt. So the bond market is taking charge. And that means inflation is going up and real bond yields are falling. So in that context, gold is going higher. And I don't think, most people, we were arguing, will gold hang around above 2,000? Now we're looking at, nearly 4,000 and people are talking about 5,000. So things do change pretty quickly. But, this is the only place where you can go for protection against government policy and central bank policy failures. And we're going to see more failures.
All right. You heard it from Nathan, more failures ahead. All right. What are you focusing on? We had that KMD update. Michelle Bullock also saying maybe we're spending too much. We're not going to get any more rate cuts.
Yeah, I don't know where Michelle's looking because we've always been spending too much. That was the whole idea why we're having inflation around the world. Everyone is spending too much. Everyone's spending on debt. And that's not what they want. Today's data, we saw GDP very strong. That was backed up by consumer spending. Today we saw consumer spending. That was the highest since, I think, January 24. So we're not slowing down on spending. And you looked at the trade data, it was pretty solid as well. Given the weaker numbers out of China, we're still doing relatively well on trade. So in that context, there is zero reason to cut rates other than pump property. And I say it again, they're just pumping property and they're finding new reasons to do it. And that's fine, but that is only creating the problems worse because affordability cannot be solved by higher prices. And that's what we're trying to do. So in that context, I'm not sure where RBA is coming from, but RBA chief is right. She's right in saying all the data that has come out in the last month is negative for rate cuts. And the whole idea of buying into a rising asset price at all-time high is that there's going to be more rate cuts. I don't see how that plays out. But that aside, the biggest thematic that's working is policy failures. That's why gold is at all-time high. And so in that scenario, you have to be long inflation because that's what the failure brings. Too much money printing, too much debt. There's no real answer to how to pay for debt. There's not a single government around the world that's talking about running a surplus or an austerity plan to pay down their debt. Everyone's got a plan to grow debt faster than they did before. So in that scenario, I think inflation is going to be higher. And you have to be long how the inflation is positive for you. So gold will continue to do well. I think energy will do well despite all the issues. History shows that every inflation cycle has energy attached to it. So it is the unloved sector, but energy sector will play catch up there. The other one is food. If you go to the supermarket, you will realize how much you're paying. Beef prices globally have hit multi-year highs, and the Aussie beef prices are now taking off in the same trend. So food prices overall are running supply side issues, weather issues. So all of these key inflation sectors are doing better, and I expect them to keep doing better.
Yeah. I paid $14 for eggs the other day. That's more than $1 an egg, right? 12 eggs, $14. What about when you talk about food? We spoke to Jack Cowan during reporting season. Obviously, he's staying long into Domino's, but what are you seeing in that QSR space? I mean, Domino's hit hard. We also have GYG under pressure, but there was an update yesterday, and it's escaping me. Collins Foods, it's done okay, right?
Collins has actually been, it's an anomaly at the, through its cycle, since it's been listed, it's been an anomaly. It was one of the few stocks that actually downgraded after the listing, got smashed. Statistically, that's like get me out trade, but they actually have performed. Yeah, so Collins Foods is a unique player. They have to give it to them. They go against trend. But the rest, when you look at retail, food, services, they're all struggling. McDonald's, you can look at Chipotle, all of these big players in the US, all struggling. I couldn't work out how GYG was trading where it was. You want to be McDonald's, McDonald's is struggling. So guess what? You're probably going to struggle. Selling Mexican food into US, I used to live in US. I think you get plenty of Mexican food. You're going to have competition. It's not going to be easy.
Yeah.
So in that context, I think it's a tough market for all of them. You mentioned Kathmandu. That's another one I've been looking at for a turnaround story because they've got an interesting brand, but it's struggled. Domino's, this is a $160 stock at the peak. It was insane at that point, but still, it's come back so much. There is value. If you like the retail sector, if you are a long-term investor, there's got to be a turnaround story in Domino's. I'm not jumping in yet, but this is what I talk to my clients about. We're creating a bench list, the stocks that you want to look at when they turn around, but you don't want to jump in right now. And Domino's, Ordinate, there's a number of these stocks on that list. I'm a massive fan of Domino's. I eat too much Domino's. So in that context, I am keeping an eye on it, but geez, shareholders have been under so much pressure. But there has to be a turnaround. I am waiting.
All right, are you going to get some Domino's delivered to all those? Where are you? You're in a chalet or something?
Oh no, that's just a background. I wanted to match up with Osby's colours.
Oh, I love it. It's very pretty. All right, Mathan, have a good night. Thanks so much. Mathan Somasundaram from Deep Data Analytics. All right, well, we talked about KMD Brands. That was the stock of the day on the call. Grady Wolf from Bell Direct and Howard Coleman from Team Invest joined Andrew.
May be able to turn it around, and they seem to have some reasonably good quality people there, so they could perhaps turn it around, but could is not an investment strategy. You want virtual certainty that you're going to have higher earnings in 5 years' time than you've got today, and so many companies that organise transformation strategies have a second one a year or two later and a third one a year or two after that. Myer must have had I don't know how many, 10 since I've been in Australia, and AMP's had probably even more. AMP's probably had one a year, and they still haven't transformed into anything that's worthwhile. So when I see transformation strategy, I go, definitely not for me.
I think cost cutting is really good. I think that in the market right now, there's better opportunities in the discretionary space, but I do look forward to seeing where this new strategy takes them.
All right, a nice rebound on the market today. Let's have a look at some of the leaders that helped get us there, including Iress rising on that CEO succession plan, Andrew Russell to take the helm from mid-November. Also some very solid buying in uranium stocks, Boss Energy and Deep Yellow looking good. Neuron Pharmaceuticals higher, and Zero rebounding from yesterday's loss as we saw a rebound in tech broadly. The laggards, though, included Megaport and Bellevue Gold coming off the gains that it had yesterday. In the small end of town, we saw weakness coming through from gains coming through from Metallium, up almost 22%. And Sunrise also had a good session, but losses coming through from the likes of Falcon Metals, St Barbara. So yeah, that same story that a lot of those gold players that did well yesterday. pulled back today. All right, tonight, US trade balance for July coming through, a $62.6 billion deficit expected. Now, you can listen to my chat with Roger Montgomery from Montgomery Invest on the website about what he's saying, the looming debt crisis and how much we should be worried about that in the US. We've also got ADP private payrolls being released ahead of the non-farm payrolls Friday and earnings from Broadcom and Lululemon. Tomorrow, we have earnings from Capricorn Metals and quite a few stocks going ex-div, including Aussie Broadband Coals and Viva Energy. But it was a great day on the market today. The first win that we've seen so far in September, a gain of more than 1%, 1.1% on the CBO 200 and a pure 1% on the ASX 200, closing higher by 88 points to 8,826. Iress and Deep Yellow, as we mentioned, among the gainers today. And there was only a couple of sectors lower, including telco and energy being dragged down, of course, by that fall in crude oil. We will do it all again tomorrow from 9:45 a.m. Eastern. Join us then.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.